All right, what's going on, everybody? Today is July 10th, a Monday, and we are going to recap some price action today. We'll look at SPY, Apple, and maybe if we have time, Tesla. I try to keep these around 10 minutes. If you haven't already, please like and subscribe so I know I'm doing this for people who actually want to see it, and I'm not doing it for no reason. So anyways, we'll take a look at SPY first. I like to recap the day on the 30-minute. Now you can do this on any time frame in terms of identifying these levels, areas of liquidity, swing high, swing low. However you want to slice it, you can do it at any time frame. I just like using the 30-minute, to be honest with you. I think it's decent for like identifying levels on a weekly time frame. And how they could be actionable within a week. I should say it that way and not using the weekly. I use the weekly for longer term ideas. But anyways, so let's take a look. We see overnight here, we gap down, right? In the process of gapping down, here are your relative equal lows or your area of liquidity. That's why when people say, oh, we double bottom, we're going to bounce. Not necessarily. There's liquidity here. Oftentimes when you do set in a quote unquote double bottom or relative equal lows, those are going to get breached at one point or another. And as you can see here, happen relatively quickly. So we gap down to start the day into our support level. We hang on to it just a hair before pulling back down, getting into another support level. And again, we're taking this level out right here. Boom. This swing low, got to it. If you could see, if you zoom in real close, you'll see we very minimally broke through that level, and that is a liquidity grab, and we took that low and we start to rise. Bodies of the candle never really lost this support level, just worth noting. So I'm going to keep that on the chart here. As we move forward, we can note we have a volume imbalance here. You see if there's a gap in the chart, you can look at it from that perspective, that area should act as a support moving forward. And so on. As we continue higher, we run up this gap. I should identify right here as our opening range gap, just so it makes sense. It's going to come off relatively shortly here. But price gets back up into and fills our opening gap right here. And this obviously was from the last candle on Friday afternoon into early Monday morning, 4 a.m. So we get up into and fill. Do not close above it at first. Reject. Come on down back into our support level here. And as you can see, off of that level, we rip, get up into resistance that was formed at 3:30 on Friday. Right here, this is an imbalance, right? You have wick, candle, wick right off here, boom. Inside that area, you can look at it as a resistance level. Now if it was flipped, like kind of like this, where you have an upside candle here, this would act as support. Okay, so we get back down into support, we rip up back into resistance, and we reject. Now where does this rejection come? Well, if you were to use this information just as a overall basis for your idea, you can then crunch it down into a smaller time frame to see what particular entry this would be in order for you to, actually make this actionable. So today we actually had an instance where we went short, and I looked at it and I saw that there was a pretty big imbalance on the 5-minute chart, and I didn't want to take that much risk out on a NASDAQ contract. NASDAQ's $20 a point. So what I did was I went down into the 1 minute. So I crunched time a little bit, and that way I identified that there was a 1 minute imbalance. That was the imbalance that I took it off of, and it ended up running, pretty nicely. I think it was like a 30 or 40 point move. So using different time frames, you don't always have to be locked in on one, but the ability to see an overall setup on a larger time frame and be able to crunch down and find it on a smaller time frame, always very helpful. So anyways, reject that level, come on down back into our support level, boom, right here, same one as before, and we bounce yet again. This we can remove. This is previous liquidity right here, and this level here, we broke through it. I'm actually just going to move it right over to here. Now that's our new swing low that we can keep an eye on there. So as price gets into support, we had the volume imbalance as well. No candle overlaid it, still good in my book, right? And we bounce, we start moving higher. Now I'm going to get rid of this as we filled that imbalance already, and we actually created a new one right here. This is a 30-minute time frame again. Boom. As we come back down into it, boom, bounce again. Come back down, get into this imbalance yet again, boom, bounce, come right up for the highs, and we actually did take the highs on this after hours, or this final 30-minute candle of the day right here. So that is SPY. So going forward, we know we have some resistance levels above. Our swing high here is 442.64. Just a quick timeout here. If you would like this information to be emailed to you daily, check out my newsletter, Markets with Mando. I'll put the link in the bio. And also, if we were just to quickly look at the daily chart on ES, which is S&P futures contracts right here, you can see we actually put in a really crazy candle. Let me just zoom in just a hair here. Boom. Okay, so this is a volume imbalance right here. You see there's no body candles, just wicks, right? And this is how Friday closed. Obviously, we ran down lower, ended up holding on to this bullish volume imbalance, right? We're going up, no candle, just wicks. We bounce higher, and look where we're closing this daily candle. Yes, I'm making this at 4:30, so there is about 30 more minutes for this candle to change. But as you can see, clearly a level of interest right here. We're just about closing today, filling that. But anyways, going back, we'll take a look over at Apple here. I actually didn't look much at Apple today, so obviously these are older levels, so you're going to have to bear with me for just a sec. Okay, so we gapped down to start the morning, okay? And you know what? I'm going to leave these on just to kind of show you guys. All right, so we gap down. We run up into this level right here. Previous support turned resistance right here. Boom. Right, this was the support level formed back here on Thursday, July 6th at 11:30. Right here, boom. And as you can see, the first time we got into it, it acted as a support level, drove us up into resistance before, obviously, the madness that occurred. And we're here. So we get up into that level and we reject. So now we fade. We fall down into this level here. This level could also, previous support, could be viewed as a resistance level. We could just put it on the chart, but could be viewed as a resistance level, and you'll see why already. We come back down, get into support here. This support level was formed on all the way back here on June 28th. So this level bounce, and in the process, so this is kind of your giveaway that your previous support turned resistance might actually not hold up, and the reason being is because we created an imbalance leading up into that level. So clearly we get up and through this level. To me, as good as gone. And we reject down. We hold this support for just a tick. We start to bounce out of it, and we get a firm rejection off that 9:30 open candle. This, to me, as you can see though, it does still play. Ready? We reject down, lower into support. We bounce. High wick gets back up into that previous support. Now we flip that resistance. Clearly we had a hard time in that area. It was a clean flip. And you can see our body candles still did not break above our previous support here. We had support bounce here. As we come back up into it, it is rejecting 1, 2 down, right? So this candle for me is going to go into tomorrow as a resistance level. And we fade again, back down. This time we take out, let's see, let me just clean this up a hair. Okay. Come back down here. As you can see, this would be our intraday sell side liquidity. Price gets up, obviously rejects that previous support into resistance. Price goes down, takes out liquidity right here. And from that point, we run higher. That's why breakout traders get killed. They'll play this little breakout below the low, and all it's doing is just ripping your face. So to close the day, we do finish in that same support turn resistance level. Here's an imbalance that we created towards the end of the day. And yeah, so that's Apple. And just based on time, I'm going to leave it here. So we did SPY and Apple. Hopefully you guys picked up on something about how I go about my levels, my process. And if you have any questions, obviously feel free to shoot me a message. And if you're looking for a home in terms of community to trade with, check out Galaxy Trading. I'm in there all day. We live trade daily. But that's all I got. So again, have any questions, feel free. Make sure you like and subscribe. I appreciate that. And we'll talk soon.